I'm Director of Investor Relations for Canada Nickel. For those of you who haven't heard of us, we were founded in September of 2019, so a four-year-old company. Canada Nickel, we represent the leader in the next generation of nickel supply. So one of the few sources of potential supply outside of Indonesia and China. One thing to note is our flagship Crawford nickel sulphide deposit represents the single largest nickel sulphide discovery since the 1970s. We are located in the heart of the Timmins mining camp. It again represents the next generation of large-scale, lower-grade open-pit nickel sulphide projects with the potential for zero carbon production. One thing to note about this asset and the key characteristic of the project is it's an ultramafic deposit. And what that means is the host rock, the serpentine rock, has a natural ability to sequester carbon. So when it's exposed to air, it has a natural ability to just capture the CO2 molecule from the air, and it traps it in the rock and it stays there indefinitely. Another interesting, so this obviously contributes to having a zero carbon footprint. One thing to note is we've achieved a significant milestone with Anglo American coming in as a cornerstone investor. They invested $24 million for a 9.9% stake. That's a great endorsement for us. It's the first sort of bulk tonnage deposit to receive a major investment from a major mining company. Again, they don't take a board seat, so this opens up the opportunity down the road for, they don't block any bidding rights down the road. And also they have just a membership to our technical committee, so they've got what's called Future Smart Technology, and they're taking some of our samples to test this new technology to potentially improve our recoveries. So our feasibility came out, our PEA came out in May of 2021. That showed robust economics of 1.2 billion in terms of after-tax NPV, 16% after-tax IRR. We're coming out with a bankable feasibility in Q2 of this year. And there's been significant improvements. As I mentioned, the ore body has an ultramafic deposit. In addition to naturally capturing the carbon, we've come up with an approach called in-process tailings carbonation, and this accelerates the carbon capture approach. So what we do is, as the tailings are going through the circuit, we're injecting it with concentrated CO2, and by doing that, you're actually accelerating that carbon capture. And we're able to achieve net zero carbon capture in less than 36 hours, whereas this process would take over 9 months. So because of that, we've delayed our feasibility study, and we'd like to incorporate IPT carbonation and the potential for carbon storage. So we'd like to build a carbon storage facility within Canada. The largest carbon storage facility is Shell. It's located in the oil sands area. And we would be there. They're actually capturing 1 million tons of carbon per year. And we're going to be aiming to capture that amount. So we'll be the largest facility in Ontario. Again, the reason we delayed it is we wanted to receive, the Ontario government is giving grants up to 37 to 60% with regards to carbon storage and carbon capture. So we're hoping to get a significant benefit from that as well. So another milestone for us is we doubled our resource. So we've basically now are at 5 million tons of measured and indicated and inferred, 3.5 million tons of contained. That positions us as the 5th largest resource globally based on measured and indicated. Our permitting process is underway, so we kicked that off in the summer of last year. So federal permits will take 2 years, provincial permits will take 3. So we'll get all permits in place by mid-2025, and we're aiming to be in production second half of 2027. Again, not only do we have the Crawford flagship deposit, we've actually consolidated quite a large land package. And we think we've got about 20 transactions, and we believe that there's more than 11 targets that are greater than the footprint of Crawford, which is quite important. Mark always says that we're building out another Sudbury here. So we truly think that there's multiple Crawford-like deposits surrounding the area that we've acquired. So in terms of the team, Mark Selby, he's our CEO and chair. He's been talking about nickel for the past 20 years. He's been in the industry. He started with Inco and then with Quadra. He moved on to be CEO of Royal Nickel. Royal Nickel had the Dumont project, and he actually took that project from resource through to permitting and construction ready. He's assembled the whole team really from Dumont, and so they have the expertise to really develop Canada Nickel through the permitting process to construction ready. In terms of our capital structure, so as I mentioned, Anglo American invested $24 million. On the back of that, we did a bought deal financing, which Scotiabank has led. We raised an additional $20 million, so $44 million in total. Of the $44 million, we paid down the Oramet loan, so that leaves us with $30 million in cash, and that gives us good runway up until 2024. Again, for a company of our just 3 to 4 years old, we've got six analysts covering us as well. In terms of nickel demand, nickel is a high growth metal, so it goes through a super cycle every, I would say, 15 to 20 years. We went through one in the 60s, the mid 80s, the mid 2000s, and we're looking to get into another super cycle in mid decade, so 2025. And this is going to be highly driven by the EV market pursuing offtake. And as you can see, from 2021 to 2030, there's 1.5 million ton demand for battery metals here. And in terms of where we sit in terms of environmental footprint, more than 100% of supply growth over the past 6 years has come from high carbon Chinese controlled supply, such as in Indonesia. And a lot of these are laterite deposits. And these laterite deposits, as you know, are very energy intensive. It uses coal power. And again, it leaves a very large carbon footprint. For us, I mean, you can see here, we're basically producing 2 tons of carbon per ton of nickel. So we are very much on the lower end of the carbon footprint. In terms of where we're located, so we're located in the heart of the Timmins mining camp. It's a 100-year-old mining camp. The Crawford flagship deposit is 30 minutes north of Timmins. You've got the Hollinger mine that was in operation for over 100 years. You've got Glencore's Kid Creek Mill, very good infrastructure in place, rail, power, water. You've got a community of 60,000 people within 1 hour drive, so a very skilled workforce within 1 hour drive. And again, one thing to note is there's no one living directly around the mine site, so we won't be disrupting anyone once this comes into construction. We came out, as I said, with our PEA in 2021. It's, again, 1.2 billion after-tax NPV. At peak production, it would be 42,000 tons per annum. Our all-in cash cost would be $194 per pound, and it's estimating a 25-year life of mine. Again, based on the all-in sustaining cash costs, would be at the first quartile in terms of C1 and all-in. In terms of our carbon footprint, we are basically going to produce 2.8 tons of carbon per ton of nickel, and we have the benefit of low carbon electricity from the grid. Most power in Ontario comes from either hydroelectricity or nuclear power plants, which have a very low carbon footprint. We're also going to be using, in terms of mining fleet, electric shovels and trolley trucks, and this will help benefit in terms of our low carbon footprint. And this does not include the benefit of our waste rock and tailings to their ability to sequester carbon. So this is excluding that here. In terms of where we sit in size of our resource, it's 3.5 million tons of measured and indicated. That puts us as the 5th largest nickel sulphide deposit resource globally. And then once in operation and fully ramped up, we'd be the 5th largest producer globally as well. And that would make us the largest base metals mine in Canada. So there's been a significant additional value opportunities since our PEA. We've really doubled our resource, as I mentioned, 1.3 to 1.8 billion tons will be going through the mine plant. We've optimized our recoveries. We're getting up to 60% recoveries. We're going to be incorporating carbon storage as well as carbon credits. And also our PGM credits will be also included in our bankable feasibility study. Again, as I mentioned, the recoveries have improved 62%, 10 percentage points better than our PEA. One thing to note is each percentage point improvement in nickel recovery would yield a 92 million improvement in NPV. That's looking at 400 million in additional value. So as I mentioned, this is partly the reason we delayed our bankable feasibility study. We've discovered what's called an in-process tailings carbonation. And the natural ability for these ultramafic rocks, as I mentioned, they spontaneously consume CO2 and they trap it in the rock. And if you look at the rock at the bottom right, the rock comes out a dark green. And over a period of 9 months, as it traps the CO2, it turns the rock this white magnesite color. And what we've done is by injecting, as I said, the CO2 into the tailings as it goes through the tailings facility, we're accelerating that process. So we'll be able to achieve net zero carbon capture in less than 36 hours. And we're generating carbon capture rates of 26 tons per ton of nickel. So we're going to be generating around 710,000 tons of credits per year and 18 million tons of credits over the life of the mine. So another interesting acquisition that we've made is the Texmont acquisition. It was a past producing mine. It was actually mined originally underground. We're looking to put this back into production and reactivate the permits within a year or so. We think this will be a nice little open pit operation. Again, it holds the ultramafic like deposits, and it'll probably produce around 3,000 to 4,000 tons per annum. And again, the capex should be very much less than the overall Crawford project. And as well, this should be in production by 2025. Again, as I mentioned, we think that we're consolidating a whole new nickel district. We've picked up 20 additional targets, and 11 of those targets have a greater footprint than Crawford. It's 50 times the scale of Crawford and 42 square kilometers in terms of size. As you can see, Reed is on the top and Crawford's on the bottom, and Reed is already almost 90% the mineralized footprint of Crawford. Very quickly, in terms of this slide really says, over the past 2 years, these are all the transactions that have happened in nickel. So over the past decade, we think that, the past 2 years, all the known nickel sulphide deposits have been picked up. Again, you can see with Wailu's bid for Midcore and Oz Minerals, when they acquired West Musgrave, it was 280 million, which was then purchased by BHP for 2.2 billion. So very quickly, in terms of our catalysts, so we've got the strategic investor with Anglo American. We're going to be appointing debt advisors for the project finance. We've got Deutsche Bank and Scotia doing the equity component. We've got our feasibility study in Q2. We're in talks with a number of OEMs and car manufacturers to put in place an offtake agreement this year. Texmont will have a resource and a PEA. We're going to come out with our environmental impact statement towards end of the year, and we'll keep exploring our systemic district exploration. And that's it.